today's lesson, I'm going to talk about why learn trading. A lot of people think that you want to learn trading so you can crush the next bull run. That's not true, right? In a bull run, anybody can make money. And essentially, you just buy, the Federal Reserve prints trillions of dollars, it inflates everything goes up, and if you're semi-sensible, you come out with more money than you started. It's easy mode. You don't trade, you don't learn how to trade, you don't delve deep into understanding the nature of markets and macro and risk in order to catch 100x in a bull market. You don't. The reason you learn trading is because what if there is never a bull run? What if Bitcoin goes to 60k in 2024 and that's it? What if it goes to 40k? What if it goes to 35k and then lower? What if instead of a bull run in 2024, 2025 like everyone's projecting, what if the 4-year cycle breaks? What if it's 2026, 27, 28 before there's a bull run? What if there's opportunities in other markets? What if there's an ongoing brutal recession? What if there's an absence of liquidity from the markets for the next 5 years? What if the stock market doesn't make new all-time highs? What if it crashes? What if it ranges sideways for 10 years? You learn trading so that you can understand trends on all time frames, but especially higher time frames. And you can position yourself to profit from those. What if Bitcoin follows the path that it should follow after the halving next year, 2024? What if it goes to 50, 55k in June, July of 2024, and it's looking perfectly set up for another bull run? Then we have a market structure break on the weekly chart. Do you know what that is? Do you know what that represents? Do you know what that signifies? What if we have major volume divergences and a downturn in the stock market in July, August, September of 2024? What if Bitcoin suddenly retraces back to 45k from 55 with a weekly market structure break? If you're a trader and you understand how to trade, you will know that regardless of what anyone says about the 4-year cycle, the best trade in that scenario is to go short, is to protect your capital, exit your longs if you're in them, flip short until you're invalidated and proven otherwise. Now, you might be right, you might be wrong. That's all part of trading. It's about having your invalidation. But if you don't learn the skill of trading, you are entirely dependent on Mr. Bull Run and basically relying on the government and the Federal Reserve to come along and just print loads of money so that they can inflate everything so that you might maybe get rich. Trading takes your future into your own hands. In trading analysis today, I posted a few charts. It was in Michael's journal. The different paths I represent. I will make as much money in any of those paths as the other. Would you? Would you make as much money if Bitcoin goes to 40 and then down to 20, rather than going from 40 to 50 to 80 to 100? Because you should be in a position where you can make money regardless. As a trader, it's compounding over time, over a number of years, that will make you wealthy. Generational wealth. Lifelong wealth. You know that 50k doubled every year, gets to 10 million in 8 years? Between 8 and 9 years? That's just doubling. That's not 100x bull run once every 4 years. And by the way, nobody gets 100x. That's not relying on Bitcoin to always do a 10x or 20x. That's not always relying on Ethereum to go to 10k. That's smart money management, understanding the opportunities in all markets and where you can position to take a 20% increase in your portfolio here, 30% increase there over a multi-month swing. Then getting out, protecting your capital before it goes down, and spotting other opportunities. That's how you get rich, stay rich, and have a skill for life. The other way, you are entirely dependent on a new bull run. So I want you to think about that, meditate on it. You are not here to catch the next 100x gem. If you want that, you might as well just close your eyes, fucking flip a coin and pick whatever lands on CoinGecko. Because there's no skill in picking 100x gems. There is skill in building disciplined, repeatable systems that allow you to manage your own wealth over time. I can't stress enough how important this is. We might be at the end of a 40-year cycle of up only. Of low interest rates, low inflation, and stock market plus crypto going up. We might be at the end of that. So the next 10 years, which is what you should all be thinking in, the next 10 years is very likely to reward people who are actively managing their own net worth. Not just putting money into an index fund and thinking, yeah, I'm going to get 8% and it's going to compound and over time I'm going to be Warren Buffett. There's a very real chance we've had a regime change. I think that. I think we've moved from the era of passive investing to active investing, management of money. Don't get it confused either. Investing, trading, it's all the same thing when you're talking about managing your own net worth. It is simply, when should I go risk on? When should I go risk off? When should I long? When should I short? Doesn't matter if it's over a 1 week, 1 month, 1 year time frame. The active will be rewarded. The passive will be left by the side of the road poor. That is why you need to learn trading and investing. Money management. You already know the government and the Federal Reserve are printing you out of existence in every region around the world, every central bank. Doesn't matter if it's the Eurozone, Britain, America. Your currency is being debased. Your money is not safe in the bank. Your investments are not safe in some pension fund that's going to get scammed. You have to take sovereignty over your own wealth. That means managing it yourself so that you can outpace the debasement of currency, which is probably 10 or 20% a year if you're in US dollars or British pounds or euros. So if you actually take a long-term view and you're out there making money in your job or your business and you want to continue to not be falling behind, you only need to make 20, 30% a year to outpace the money printing. You don't need 100x's. Think about compounding. Play the long game. Make sure that you're rich for life, not rich for a year and then poor again when everything goes down 99%. Why not be the guy who catches most of the bull run, then protects his capital, and then catches most of the bear market? Makes money on the way up and the way down. That's very doable. That's very achievable. But you have to commit to it. So understand this today. Really think about it. I hope that helps you understand why you're here.
Money, money, tô gastando money. Depois que eu lancei o Megane, ela pede pra chupar. Eu agora moro na rua, pede pra visitar. Eu depois que eu lancei o Megane, ela pede pra chupar. Eu agora moro na rua, pede pra visitar. Eu money.
Hey, Dolomite, turn to $1 million, then we all rich. That's just how I feel. Be the last one out to get the dough. No way, not one of you bucket-headed hoes. No way, hit the streets and we break the code. No way.
Meu brilho te mete sempre, já não ando desfilo. Mas achado que sei, babies, que tá gira por aí. Meu mano, isso é tudo nosso, e não é nosso, é de nós. Como a nossa e do poço, então não fala que não viste. Atrás do meu money.